Welcome, everyone. Today, we're diving into how finance and risk leaders are preparing for growth in a world full of trade uncertainty. Before starting, let me introduce myself. I am Alan Lipsey. I'm a journalist at the Financial Times in London, and I specialize in asset management and investment. This masterclass follows a really unique study, the Coface Global Trade Risk Study. This has been done with Longitude, a Financial Times company. The study shows that while volatility is up, the race for growth hasn't slowed. It's intensified. Economic shocks, political instability, and financial disruption are creating uncertainty at every turn. But growth still favors the prepared. We surveyed 200 senior finance and risk leaders worldwide, and the message is clear: growth belongs to those with foresight and the right tools. As one treasurer put it, just providing support for the business to still grow in a sustainable way is a huge task for us in treasury and finance. Let's see how leaders are tackling it. So, with me today are Nicolas Garcia, Commercial Director at Coface, Karine Damman, CGS Director, responsible for multinational companies within Coface, and Ryan Kemp, Commercial Director of Coface's Business Information Services. So let's get started, shall we? Nicolas, you are Coface's commercial director. The report shows a lot of turbulence. So tell us, what's the big picture?
Yeah, absolutely, Alan. And I think the world is shifting very fast. US bankruptcies are hitting a 7-year high level. Europe is experiencing also a spike in insolvencies. China keeps slowing down due to the very low level of domestic consumer spending, and it's also facing deflationist pressure. We are also observing a rise in some fraud cases like the First Brand or Broadcom Telecom in the US. And yet, companies are not backing down, they are adapting. Our studies shows that 40% of companies are focused in cutting cost. 34% are tightening their credit governance, and 28% are actively managing buyer default risk. So yes, the environment is challenging, and the best prepared businesses are already moving forward.
Okay, that's great. In concrete terms, Nicholas, how does this materialize within the companies themselves?
Yeah, we observe that many groups are currently reconsidering their internal credit management setup with two main goals. First, for making sure that it is in place in all areas. And second, for making it much more efficient and more agile. Let me give you two examples of Coface clients. We have a German client, which is a conglomerate. It is active in many different geographies, in many different business lines. Over the last 12 months, its risk management department has been actively pitching finance leaders of each and every entity of this group. To facilitate that, it has decided to create a proper credit risk mapping using our business information data. And then using this mapping, the credit management structure, the group risk management structure is engaging a dialogue with its local finance leaders to see if they are the most appropriate tools and to manage their risk and eventually to transfer the risk through trade credit insurance solutions. The second example I have in mind is a French group. It's a leader in its business sector. It has decided to regroup its credit management providers. Historically, it had several local providers and a larger relationship with Coface. In order to optimize its cost and to streamline its credit management processes, it has decided this year to use a unique trade credit insurance partner and to use Coface globally. This simplification allows this group to reuse some investments made in its IT connectivity between Coface and its own credit management software. So at the end, it provides a better return on its investment.
That's great. Thank you, Nicholas. So we're seeing increased volatility, rising insolvencies and slowing growth in key markets. Um, Companies are responding with cost optimization and stronger credit governance. But next, now let's talk about solutions, how businesses can protect themselves and grow confidently. Karine, as Coface's Global Solutions Director, trade credit insurance isn't just about protection, is it? It's about enabling growth. It helps companies extend payment terms, secure financing, and enter new markets with confidence. Karine, could we talk a bit about trade credit insurance? What role is it playing in this environment?
Thank you, Alan. Yeah, honestly, trade credit insurance become more and more essential. And what is important to keep in mind is that it isn't just about indemnification of or collection of unpaid invoices. It's really about enabling growth. Let me remind first what is credit insurance. It's a protection against losses due to non-payment of commercial debt. And basically, when a company buys credit insurance, they will have access to three different services. One, prevention of risk with insight on the main counterparties, indemnification of unpaid debt, and then finally debt collection. But what is important is also to keep in mind why companies are buying credit insurance. And what I can see from experience on multinational, my experience is that they are using TCI to confidently enter new markets, knowing that they have a safety net against buyer's default. We see also that multinational companies use TCI to negotiate better terms with customers, and thanks to the coverage that it provides. They see trade credit insurance as a strategic enabler, not just for protection, but also for unlocking access to financing. And finally, they integrate the TCI in the credit governance frameworks, and it makes it a core part of the risk and growth strategy. From the study that we have here, we can see that 61% of users that it helps them extend open terms. In the same proportion, they say that it improves access to capital. And then 56% of the users say that it gives them peace of mind, which is, of course, really appreciated in this uncertain world. So I have also in mind one of our clients saying they are in the logistic sector, and they say that they were facing a major restructuring, and during this time, they could also continue to focus on growth because indeed they had this trade credit insurance giving them this peace of mind that allows us to focus on both the strategic growth and the restructuring.
Okay. And what about the companies that don't use TCI?
Well, they're feeling it. It's also something we can see from the study. If we can compare the users of credit insurance and the one who don't use credit insurance. So 56% of non-users fear that unforeseen significant loss could hinder their business. And this drops to 36% of companies who use credit insurance. Also, another example is that 84% of non-users of credit insurance face capital access problems, while it's going down only to 61% of companies when they are buying credit insurance. So we see that this makes a big difference. Using credit insurance makes a big difference in both the risk and the growth strategy.
Okay. So what's been your experience, Karine? Do you have some examples?
Yeah, I have different examples, but I have one in mind, which is a company, family-owned, very manufacturing company, very known on this market. But this company wanted to extend to Latin America. So of course, this represents a very strong opportunity, but also high risk. Moving to a new area means new buyers, unfamiliar regulation, and market with volatile payment or behavior or volatile environment. So they were hesitant to go there until they partner with us with a trade credit insurance solution. With the coverage that we put in place, they could select the right partner, offer competitive terms, secure financing in one of the countries they were operating, and with all that, enter the new market confidently. So the result is there. In a couple of years, they managed to grow by 20% our existing business. And this is showing clearly that trade credit insurance is not only about protection, it's also a growth enabler.
Okay, thanks, Karine. That was really insightful. And so we've seen how trade credit insurance can give companies the confidence to grow. Well, protection is just one part of the story. What if you could actually predict risk before it happens? That's where I think business information comes in. Ryan can tell us how the data is helping companies make the smarter decisions now. So Ryan, you're Coface's business information commercial director. So let's shift gears here a bit and talk about business information. What's the state of play right now? And could you also tell us how data is helping companies make smarter decisions?
Sure. Thanks, Alan. So maybe just to start with, I think it's fair to say most companies believe today that they're using data well, and they are using data. I just think it's perhaps not in a way that is necessarily improving the decision making always. What we see here is 92% of companies pulling information from many different sources, but actually only 18% of them are having what I call a truly advanced approach when it comes to managing that data. That means the majority are actually relying on basic reports or spreadsheets, having manual reviews, and that's pretty risky to be running a business in that way today. And this is exactly where we focused at Coface by developing Urba 360, our risk management platform. It gives you a 360-degree view of your business partner portfolio, so you can move from a reactive mode to more of a proactive and much more confident mode. In the platform of Urba 360, we're combining payment information, so payment behavior, and we're classifying risk or late payment or non-payment information into 3 levels. So really easy to spot things happening very early on when it comes to risk. You also get a view on the country and the sector level analysis, and that's in over 160 different countries. So if you're looking to enter a new market or into a region, you have the insight to be able to do that effectively and mitigate that risk. And then the score within the tool itself is a probability of default over the next 12 months. And that's a consistent score of 0 to 10 all over the world, no matter where you are. And there's one last element to it that I think is relatively new, but very, very useful in that we're simplifying the compliance element. So with verified information, you can check on politically exposed individuals or maybe even sanctioned individuals to allow you to trade more effectively, let's say, with less risk. All of this is available via the Urba 360 tool. So log in via the platform if you like, or indeed you can integrate it also into your existing workflows via our API. But I think the point here is that these companies that are using third-party business information tools like Urba 360 are suffering less than half the losses and bad debt of those that don't. So the impact is actually quite measurable.
Great. So we also know that risk management touches different teams, don't we? So do we have any insight into what each team is prioritizing, Ryan?
Yeah, actually, that's where it gets quite interesting. So, as you can imagine, different departments are focusing on different parts of the risk picture. For example, 57% of treasurers are saying their top concern is payment defaults, which makes sense, right? Because they're looking at cash flow every single day. But on the procurement side, it's quite different. Only 33% put payment defaults at the top of their list. Their priority is quite different. In fact, 60% of the procurement leaders say that financial information is their main focus when they're assessing suppliers. So you end up with quite a fragmented view of the risk across a business. You've got different teams looking at different parts of the problems, but no one's really assessing the whole picture. And this is where Urba 360 can help and make quite a difference. It's bringing everything together in one environment, in one platform, in one view, so that all the teams can operate using the same insight together and have a really consistent view of the truth.
And what about your own experience? Can you share a real life example?
Absolutely. In fact, it's another German customer of ours, a major global player, and they were looking for quite a consistent view across the business. I mean, for them, they're looking for a way of getting much more informed decision making with what we heard from Nicolas earlier, which is a very complex risk environment that is increasing. And they wanted this across both their customer and their supply chain side. So by integrating the insights into their processes internally, their procurement processes, their sales processes, they're able now to anticipate disruptions faster. They've strengthened their resilience, and they're making much more confident decisions to protect their entire business. And at the same time, they've been able to rationalize technology costs by having a single risk partner. And I guess what's interesting to Labour in the procurement side is that while in the study leaders have suggested on the procurement side that financial information within standard business reports is a key aspect of that decision making, in fact, that's looking into the past. With Urba 360, what you're getting is a probability of default in the next 12 months, which is a forward-looking view and really giving you a picture of what's ahead.
Okay, that's great, Ryan. Thank you for that. It's very, very, very interesting. So finally, let's wrap up here with how business information and TCI come together to create a powerful strategy for growth. Nicolas, could we get some last words from you on this?
Sure. Look, if there's one thing to remember is the following. Growth favors the prepared. With the right tools like Coface Business Information or Trade Credit Insurance Solution, you can protect your business and move forward with confidence. And that's what Coface is here for.
Thank you. Thank you to Nicolas, Karine, and Ryan, and thank you all for joining us today. To learn more, you can visit coface.com or reach out to your Coface contact or connect on LinkedIn with one of our speakers. So I'm going to just leave you with our phrase for today: stay geared for growth. Thank you.